Does the solo 401k loan still make sense? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of AdBits. This podcast, I am going to be discussing, does pulling money out of your solo 401k in 2023 still make sense? And the reason I'm even doing this podcast, questioning does it make sense to pull money out of your plan tax-free and penalty-free, is high interest rates. Currently, the prime interest rate, and this is early June 2023, is 8.25%. Okay. During COVID, it's 3.25%. So that means there is a bigger cost to borrowing money from your 401k. So before I get into the mechanics of how the loan works and going through some of the number crunching to determine does doing a solo 401k loan still make sense, let's just go through some of the loan basics, if we may. So I wouldn't say almost. I'd say a lot of 401ks and solo 401k have loan options. In an IRA, you're not allowed to borrow a dollar. In a 401k, there's this provision that's entrenched in 4975 D1 under Section 72 that allows, and even 401, that allows a 401k to borrow $50,000 or 50% of the account value. So a plan participant of a 401k can borrow $50,000 or 50% of their account value, whatever's left. So if someone has $40,000 balance in their 401k, they can borrow $20,000. Someone has a $100,000 balance in their 401k, they can borrow up to $50,000. Someone has $1 million balance in their 401k, they can borrow up to $50,000. Now, you don't have to do anything, right? It's totally a decision on the part of the plan participant. The way the loan works is generally a 5-year loan. There is a way to expand that loan if you're buying a primary resident. You can go up to 15 or 30 years. You're still capped at that $50,000 or 50% value. Generally, a 5-year loan. It's generally paid at least quarterly, monthly, bi-weekly. A lot of people just pull it off payroll. So it's bi-monthly, bi-weekly, I should say. Bi-monthly. And the money goes back to the plan. That's the key part of this. So when you pay back the money, it's a combination of interest and principal combined. Okay, so you can't just do a balloon payment or an interest-only loan. It's a standard straight-up 5-year straight-line loan. So interest and principal is mixed in. Now, unlike borrowing money from a bank or a credit card company, the money is going back to you. Okay, so you may be saying, well, Adam, higher interest rates are good, right? If I'm paying myself back, the higher the interest rate is, that means the more money is in my plan. Yeah, 100% you're right. The catch is you got to come up with that money. Why? Because if you aren't able to make your loan payments and can't correct it during the plan year, the outstanding amount of the loan is generally subject to tax and a 10% early distribution penalty if you're under the age of 59 and a half. So the penalties, are real, and the cost could be material. So number one, if you're doing this, make sure you can pay back the loan. And it's very easy to plug it in at any free loan calculator. We got some on our website. Example, you take $50K, 5-year loan, your monthly payment is about $1,000, 20. Okay, the total interest over 5 years is going to be $11,188.75. That means that you're going to get an 8.25% rate of return on your investment. And over 5 years, you're going to borrow 50 and you're going to pay back 11,188, which would give you 61,188. So that $50,000 will turn into 61,188 over 5 years. So the play is, hey, my plan gets a guaranteed 8.25% rate of return. How do I know it's guaranteed? Well, I'm paying it, so I better pay it back. And I get tax-free, penalty-free use of up to $50K. So it's kind of a win-win. The difference today versus a couple of years ago, or even 15, 12 months ago, is the interest rate's higher. So on one hand, that's good because that's more money going into your plan. On the other side, it's cash flow, right? You got to make sure you have that 1,020. Let's say instead of let's go back. So instead of 8.25% loan, let's do So instead of, let's say you borrow $50,000, okay, 5-year loan, if interest rate was 3.25%, okay, your monthly payment would be $904, and total interest would be $4,240. We saw in the other example, the total interest was $11,100. Okay, so it's almost 3 times the amount. Now the monthly payments aren't huge, right? It's not a huge difference. It's really just the interest. The principal is the principal. It's still $50K you got to pay back. The difference is instead of 3.25%, it's 8.25%. So it's not a horrible thing from a monthly cash flow standpoint. You're looking at a couple $100 a month. Now, I know, I get it, it's money, but it's all interest that's going to go back over a 5-year period. A lot of it, the difference is interest that's going back over a 5-year period into your 401k. So I think it's actually a great time to do a solo K loan, even better than when interest rates are 3.25%. Why? It's a guaranteed 8.25% rate of return on your investment. So from that standpoint, it's a huge, huge, huge win. You can even do a higher interest rate if you want it, 9.5%, 10, whatever. Just make sure you can pay that monthly payment back. That is the key. Okay, so you get tax-free penalty for use of the money. You can do multiple loans during the year. You just can't go above that 50K. And there's a formula for that. Our plan documents allow you to do multiple loans up to the 50K. So you don't have to take it all at once. You can do 10 loans of 5K or 8 loans of whatever, 12K, whatever, or 6K, whatever it comes out to. So you have flexibility. The key is make sure the payments are made back in a timely manner. If you miss some, just correct it during the year. You don't want to go extend it through a year and not correct the loan payments. Since it is a solo plan, you technically have the ability to correct it as the administrator of the plan. But if you follow 5,500 EZ, you're going to need to make sure that those funds are actually paid back and reported. So you want to make sure during that year you've paid back the amount. But all in all, I actually think it's a great time to do a loan. I read somewhere that it's going to be the highest discrepancy between the savings rate and the debt rate for individual Americans. So people are going to need to tap in to their retirement account. If you have access to a 401k, if you're one of the 200 or so million Americans that have access to a 401k, it's about 60 million Americans that contribute. So there's a chunk of people that aren't even contributing. So it's a good time and a good reason to think about contributing to a 401k. The loan is just a safety net that we all potentially could use. I've used it in the past. So it happens, right? We all get into situations where things happen, medical, family, credit card, it's a wedding, party, something pops up. There's always something, right? Like last month, my air conditioning busted. It was like 10K. Like every month, there's always something. I'm always telling my wife, okay, next month the credit card is going to be a lot less. Like I know it. There's nothing like I see on the horizon that's going to be a problem. Of course, like a week later, something happens, right? And bang, it's like, oh, a couple thousand more here, there, wang. And listen, it's expensive to live, whether it's rent, gas, food, vacation, air flights. I mean, it's super expensive to live these days. God, it's crazy. So I get it. And you just know that the option is the loan is not a bad option because it's actually a great option because you get tax-free penalty for use of the money and you're paying your plan back. So it's a guaranteed rate of return on your investment. So that's it. Yeah, I think today is actually a great time to consider the 401k or the solo 401k loan option. Just again, do the numbers. Make sure you can pay the loan back. It's $1,100-$1,200 a month on the full 50K at 8.25%. It's real money. Okay, so if you don't need the full 50K, don't take it all out. Maybe you take 20 out or 10 out at a time. Just remember, it's 50K or 50,000. Sorry, 50K or 50% of your account value, whatever's less. So just run the numbers. Any loan calculator can help. If you have questions, you're a client of ours, call us. We would love to help you and make sure that you figure all this out and you make the wisest decision. So that's it. Another AdBits in the bag. I appreciate you guys spending some time with me today. I hope you enjoyed the podcast. If you're watching on YouTube, thank you. If you have questions on the solo 401k loan, setting up a solo eligibility, whatever, we have the smartest team of tax professionals that are standing by, happy to chat by phone, email, whatever works. We're here to help. and we'd love to hear from you. So don't hesitate. Otherwise, just have a great rest of your day, and hopefully I'll see everyone again next week. Ciao. Take care.